Hi, welcome dear viewers. Dr. Vijay's lectures on accounting number 20. Solution to the assignment given in lecture number 18. Final account and balance sheet. This lecture contains the trial balance and further additional information. Then further 3 slides explain the various adjustments needed very clearly, and it is followed by the answer. Trading account, profit loss account and balance sheet. Let us go to slide 2, trial balance. Trial balance of Sabu's firm on 31st January 2021. Debit balances include cash in hand, sun debtors and bills receivable. The 3 items are current assets to come in balance sheet asset side. Stock and trade opening, that is opening stock, should come in debit side of trading account, first item. Local taxes and insurance charges to come on the debit side of profit and loss account. Plant and machinery bought on 1st July and furniture and fittings, these 2 are fixed assets, should come in balance sheet asset side. Purchases to come in trading account debit side, second item. Returns inwards is sales returns to be subtracted from sales on the credit side of trading account. Carriage inwards and wages for unloading, both should come in trading account debit side. Salaries and establishment charges and rent and rates to come in profit loss account debit side. Discount allowed can be explained only at a further stage. Credit balances include bank overdraft, which is a current liability. Then provision for bad debts and provision for discount brought down. These 2 are old provisions for bad debts and for discount allowed, can be explained only further. Sundry creditors and bills payable are current liabilities. 6% loan from Azad Bank taken 1st April 2020 is term liability. Capital, that is opening capital, along with that net profit are to be added and drawings to be subtracted, etc. Sales to come on trading account credit side, first item. Returns outwards, it is purchase returns to be subtracted from purchases in the debit side of trading account. Discount received and commission from Meadows are incomes on profit loss account credit side. Slide 3 gives additional information. Let us read the additional information very carefully one by one. There are 11 items. First one, interest charged by bank on overdraft as per passbook. Please understand, it is not recorded in cash book. Second is, the aggregate of bank charges for service rendered is 6,800. It is implied that it is not shown in cash book. Third, insurance premium paid for 1 year with effect from 1st April 2020. We are closing accounts on 31st January. So, premium paid for 2 months is prepaid. Furniture and fittings purchased on 1st September 25,000. Provide depreciation for furniture and fittings at 20% on reducing installment method. Whatever balance is shown in furniture account at the end includes this 25,000. So from that, subtract this 25,000, you will get the furniture which was there at the firm from the very beginning. For that rest of furniture, balance of furniture, you have to calculate depreciation at 20% for whole 1 month, and for 25,000 you have to calculate depreciation for the months from 1st September 2020. Salaries outstanding for the month 14,250. 6. Commission for purchases from Meadows for January 2021, 36,000 is still receivable. As per agreement with them, commission is receivable for all the purchases from them at 2% of invoice price. So, for January purchases, the commission is not yet received. It is outstanding income. Next, depreciation is chargeable for plant machinery 10% per annum, reducing installment method. Calculate only for the period from the date of purchase of machinery. Now, 8. Provision is to be made for bad debts at 5% and for discount allowed at 2% of closing debtors. To take standard debtors as given the trial balance, calculate 5% of it, that is new provision for bad debts. Then subtract this new provision for bad debts from some debtors. Whatever remains, for that calculate 2%. That is new provision for discount allowed. What is to be done further, we will see. 9. Rent is paid for 15 months with effect from 1st February 2021. So, rent paid for 3 months is prepaid. Now, further loan at 6% per annum accruing at the end of every quarter is got from Azad Bank on April 1, 2020. The old dues was cleared on 1st February 2020 itself. There was an old dues from loan from Azad Bank that was cleared at the beginning of this period. New loan is raised only on April 1, 2020. So you need to calculate interest for that loan at 6% only for the period from April 1, 2020. And the last additional information is local taxes paid for second half of the year 2020 is 2,000. You have to calculate how much portion is prepaid or outstanding. Only this 11 additional information are given. There is nothing regarding stock of goods at the end, and the item drawings is not there in the trial balance. As the two items are not there, we have to proceed on the impression that there is no closing stock and the proprietor has not taken any drawings during the year. Let us go to adjustments one by one. Additional information 1 to 4, that is the first 4 adjustments, are explained in slide 5. Let us see one by one. Interest on overdraft is to be added to bank overdraft as per cash book and has to be an item in the debit side of profit loss account. We have seen the first information is interest on overdraft charged by the bank is recorded in passbook. It is implied that it is not recorded in cash book. The overdraft makes an addition to the bank overdraft. It's an expenditure. So, interest on overdraft is to be shown in profit loss account debit side and is to be added to bank overdraft and balance sheet liability side. Similar treatment is needed for bank charges also. That is, bank charges to be shown in profit loss account debit side and to be added to bank overdraft and balance sheet liability side. The third information is insurance premium 12,300 is for 12 months with effect from 1st April 2020. Our accounting period closed on 31st January 2021. So, the premium paid for the months February and March 2021, it is prepaid. So, 1/6 of the premium paid is prepaid. That is 2,050. It should be subtracted from insurance premium in profit loss account debit side, and it is to be shown as a current asset in balance sheet asset side. Next, the fourth adjustment. For the balance brought down in furniture account, depreciation should be provided 20% under opening balance. That is 20% of 22,617. From the total balance of furniture given in trial balance, 25,000 is subtracted and we get 22,607. That is a furniture which was there at the firm from very beginning. For that, depreciation is to be calculated 20% for 1 year, 4523.5. For the furniture purchased on 1st September, we need calculate depreciation only for 5 months. That will come to 2083.33. The depreciation is to be shown in profit loss account debit side and to be subtracted from furniture in balance sheet asset side. Okay. Additional information 5 to 9 are explained in slide 6. 5 is salaries outstanding. It is to be added to salaries in profit loss account debit side and to be shown as liability in balance sheet. Now 6. Along with commission received on the credit side of profit loss account, which is there on the credit side of profit loss account, commission still receivable for the month of January 2021 is to be added. That is 2% of 36,000, that is 720. It should be added with commission received on credit side of profit loss account and should come as asset in the balance sheet. 7. Depreciation on machinery is to be calculated at 10% per annum for the period from the date of installation only. So it will come to 7309. We have to show it in the debit side of profit loss account and to be deducted from plant machinery in balance sheet. Closing sum debtors is 1,92,000. Provision required for doubtful debts is 5% of that, that is 9,600. Then provision for discount is 2% of debtors. That 2% we have to calculate only after subtracting the provision, new provision for doubtful debts from the sum debtors. That is 2% of 1,92,000 minus 9,600 is to be calculated. That will come to 3,648. So new provision for doubtful debts is 9,600 and new provision for discount on debtors is 3,648. Regarding how it is to be shown in balance sheet, look at the trial balance. There is no bad debts. There is old provision. The formula to be applied is new provision plus bad debts minus old provision. Here there is no bad debts. So simply new provision minus old provision. New provision is 9,600. Old provision as given trial balance is 4,600. So this new provision minus old provision, that is 9,600 minus that old provision 4,800, that we have to show in profit loss account debit side. Regarding provision for discount, new provision is 3,648. The formula to be applied is new provision plus discount allowed minus old provision. There is discount allowed in debit side of trial balance and there is old provision on the credit side. So you have to apply new provision plus discount allowed minus old provision. That you would show in debit side of profit loss account. In the balance sheet, from the sum debtors, you have to subtract both the new provisions. That is 9,600 provision for doubtful debts and 3,648 provision for discount. Both should be subtracted from sundry debtors. Now, ninth adjustment, rent paid 72,000 is for 15 months with effect from 1st February 2021. Therefore, rent for 3 months is prepaid. The 3 months beyond 1st February 2021. Beyond 31st January 2021. That is prepaid. That is 4,800 per month. So it should be subtracted from rent in the debit side of profit loss account. It should be shown as asset in the balance sheet. Slide 7 explains adjustments 10 and 11. 10 is interest payable to Azad Bank is for 10 months from 1st April 2021 to 31st January 2022 at 6% on 70,000 rupees at quarterly risk. Total interest compounding is calculated at quarterly risk is 3,564. The amount has to be shown as expenditure in profit loss account debit side, and that is to be added to loan to Azad Bank in the balance sheet liability side. So, interest payable to Azad Bank is outstanding. That we have to show in profit loss account debit side 3,564, and along with loan from Azad Bank, this should be added in the balance sheet liability side. Sorry, here is shown as loan to Azad Bank. It is loan from Azad Bank. Sorry. Now, item number 11. You have to read what is written there very carefully. Local taxes for first, I will explain better. See, the local taxes paid during the year is 2,000. That is given the question. Local taxes paid for, that is for half year, 2000 is for half year. The first half year local taxes 2000 was paid on January 2020. Out of that 5 months was prepaid because the accounts were closed on 31st January 2020. So out of that 2000, that for 5 months was prepaid, that is brought forward through a reverse entry to this period's account book, this period's local taxes. It is 1667. So that 1667 plus local taxes paid during this period 2000 is 3667. Even that relates only to 11 months. The local taxes payable for January 2021 is yet not paid. That is outstanding, 333. So the local taxes is outstanding for 1 month, that is January 2021. That is to be shown, added along with local taxes in profit loss account deficit and to be shown as liability in the balance sheet. Okay. Slide 8 gives the trading account of Sabu's firm for the year ending 31st January 2021. Heading is common for trading account and profit loss account. Trading and profit loss account of Sabu's firm for the year ending 31st January 2021. In the deficit of trading account, first item is opening stock of goods 30,000. Then comes purchases minus purchase returns. Then carriage inwards and wages for unloading goods. Carriage inwards and wages are direct expense of purchase of goods. On the credit side, sales minus sales returns 6,64,700. Only that closing stock goods is nil. Nothing is said about closing stock, so we will take it as nil. Therefore, trading account total is 6,64,700 and gross profit is 2,23,710. Slide 9 gives profit loss account. Items in debit side are salaries plus outstanding salaries, rent and rates less prepaid, insurance less prepaid portion, local taxes paid plus outstanding, interest on overdrafts, bank overcharges, interest on loan from Azad Bank, provision for bad debts, new provision minus old provision, 5,000, and depreciation of machinery, 7309, depreciation of furniture and fitting, 6607, provision for discount allowed plus new provision minus old provision, 5,100. Under credit side, the first item is gross profit, which is brought down from trading account, 223,710. And then commission received plus receivable for 1 month, 17,370. Discount received, 2,200. As the expenditure side is more, that weighs more, there is net loss. So net loss transferred to capital 18,600 comes on the credit side. Slide 10 shows the balance sheet of Sabu's firm as on 31st January 2021. On the right hand side is assets and properties. The first item is fixed assets less depreciation. First is plant and machinery, 1,25,300 minus 7,309, 1,17,991. Furniture and fixtures 47,617 minus 6,607, 41,010. Then comes current assets. First is receivables minus provision for bad debts minus provision for discount. That comes to 1,78,752. Bills receivable 32,000. Cash in hand 26,850. Commission receivable from Meadows 720. Insurance prepaid 2,050 and rent prepaid 14,400. On the credit side, capital, opening balance of capital minus net loss minus drawings Here there is no drawings, only loss. When subtracted, 84,126. Then comes term loans, next item. Loan from Azad Bank. Interest is outstanding, that we have to add 70,000 plus 3,564. That is 73,564. Then comes current liabilities. Creditors for goods supplied. Bills payable. Bank overdraft plus interest plus charges. Then salaries outstanding. Local taxes payable. When all these are added, it tallies. This lecture is coming to an end. Thank you for your participation till the end. Please subscribe, share, like, and make comments. If you have doubts regarding any adjustment, please make it clear. It will be explained further through shorts or in the next lecture. The next lecture is on final accounts of partnership firms. Thank you. This lecture is coming to an end. Thank you for your participation till the end. Please subscribe, share, like, and make comments. If you have doubts regarding any adjustment, please make it clear. It will be explained further through shorts or in the next lecture. The next lecture is on final accounts of partnership firms. Thank you.